Good afternoon, everyone. Welcome to our panel on the future of point-of-sale lending. My name's Zhang. I'm a senior associate at McCarthy Tétrault in financial services regulatory, and I'm excited, super excited, to be moderating the discussion ahead. Now, we all know the pandemic was awful for many, many reasons, but there were some lessons that parts of the world benefited from. And one of the things it did was accelerate digital payments and adjacently accelerating point-of-sale lending. So I just quickly did a look to see what the status is, and according to a TransUnion study, point of sale is one of the fastest growing forms of purchase financing for consumers and merchants today. And in the next 30 minutes, we will discuss what the future holds for this financial solution. Joining me are four esteemed Canadian lenders, Canadian leaders in this space who do not need any introduction by me, but I will name them. Jeff Schwartz, CEO of GoLime, Casper Wong, CEO and co-founder of Financeit, Jessica Moffat, journey leader of Flexiti, and Wayne Pommen, CRO of Affirm. So I'm going to dive right in. Now, without sharing all of your secret sauce, what innovations in point-of-sale lending do you think will become popular in the near future? And as you think about that one, how have you seen consumer lending evolve since its growing adoption? Anyone can go first.
Happy to start.
Thank you, Jessica.
No problem. Innovations in consumer lending is really obvious with having this panel, all my esteemed partners up here, that it's becoming ubiquitous. Customers have made it very obvious that they're looking for alternatives to traditional payment methods. And there's a number, thank you for that, and there's a number of use cases across the spectrum on how promotional financing and alternatives can really fit into consumers' lives. For us, we're really focused, and we've heard this many times over today, about really solving for that in-store experience. So customer is in line, they are provided with choice at checkout, and now they're provided with a number of options. It's really important as we introduce this choice, to not also introduce complexity. It's hard. Some customers don't know whether putting it on a credit card or equal monthly installments, or even the benefit of leaving it in their bank account or leaving it in their investments, and for a year, what choice works best for them. So for us, we're really looking at, obviously, removing the friction in that onboarding experience. I think everyone would attest to that. How do we just make it faster, seamless, and just simpler? But really doubling down on understanding the benefit that choice will make in them managing their cash flow. So I can pause there and obviously go on, but I think that's some of the most important areas of focus for us is true personalization at point of sale so that customers understand the choices available to them and what's going to work best for them managing their personal finances.
If I can jump in with a question to that, how do you personalize something as a customer where you don't know them until they tap or get up to the,
Well, with Flexiti, we have an extensive network of merchant partners, and a customer only needs to apply once at any of our retail locations. There's about 8,000 across Canada where customers can use their Flexiti card. So for us, it's a little bit different that we know our customers, we know where they were acquired, we know their purchasing patterns, and it's really up to us now to take that to the next level and really help personalize that experience. Help them know you just bought a house, you have needs to furnish said house. What are the options available to you within our network, and what are not only the options in terms of the retail locations and the merchant partners that we work so closely with, but the financing options available for them and what's right for them at that time.
Cool. I see you guys nodding a lot, so don't hold back.
Yeah, happy to jump in. Just on your original question about innovation and some of the trends, us and others on the panel and our direct competitors in the US, we have collectively thousands of engineers and product managers beavering away at all times, developing all kinds of different things around what began as, the concept of point-of-sale lending. Totally agree with what you said about ubiquity. Like, a huge amount of the investments we're making now are how do we have pay later or buy now, pay later everywhere at every checkout for all kinds of different purchases as a true credit card alternative. So I've been in this industry about 9 years or so. I know there's others who've been around longer, but we started with the web and the tablet, at the point of sale, and then we went to the integrate with an e-commerce merchant and checkout. Now a lot of our investment is pushing it out through these big distribution channels like wallets, Apple Pay, Google Pay, Shop Pay, through the payment service providers, so that it's everywhere that a customer is shopping. And as you said, it's totally becoming an expected payment method that people want to find everywhere.
Yeah, and maybe it'd be helpful to kind of break out a little bit of the nuance between the different businesses. So Financeit is primarily focused on the home improvement industry, right? And we are primarily focused on in-store physical. Like, that's how we started our life, versus companies like Affirm, are more e-commerce focused and focused on that online experience. So I think it's interesting to see the different angles people look at when they talk about innovation. For us, I really think about our business primarily as a sales enablement platform. Like, we exist to help merchants sell more stuff, right? And we've built an ecosystem to do that, where we have a lot of different players, right? From manufacturers to us to the lender. At the end of the day, we're a B2B2C company for now. In terms of innovation, we do kind of like to look at the US. The US is a much more mature marketplace. It's where a lot of this stuff started. Point of sale financing was largely invented by the auto industry. It's been around for a long time. And so, when we look at best practices and innovation, for us right now, the big trend in our industry for home improvement is really getting deeply integrated into how merchants sell. Where do they generate leads? Is it online? Are they buying leads from different distributors, from Costco? What are the communication touch points that you have already built, where you're sending automated emails out to your customers? Every single touch point is an integration opportunity, right, for financing, for point of sale financing. Every single tool that we've built actually allows a merchant to use our tools to then offer payment plans when they're interacting with their customers in a very seamless way. So we have APIs, we have Finance Direct, lots of different interesting tools. And then in addition to that, we've really spent a lot of time trying to find great integration partners. So we are integrated into ServiceTitan, which is the Salesforce for the home improvement industry, right? So that's part of it. In addition to the sales enablement integration experience, I think, I really like to think about innovation as kind of US versus Canada for our industry. If you look at a metric that we track very closely, which is share of wallet, right? Share of wallet is a percentage of revenue that is on financing versus not on financing. Most US companies have a much higher share of wallet than Canadian companies. So one of the big innovations for us is, how do we provide thought leadership and train our merchants to teach them how to be better at sales using payment plans? And the stats are I think in the US, 30-40% is standard. Canada's 10 to 20%. But our best merchants are 80-90%, right? 80 to 90 cents on the dollar of everything they sell is on financing. When that happens, you can see, statistically proven, your average transaction size goes up, your close rates go up. So for us, innovation is technology, but it's also being deeply embedded and understanding your customers so that you can bring the right solution to them. Because the technology is just, part of the solution, but it's not always just an innovation that's driven by technology. It's deeply understanding your merchants and embedding yourself through the entire process.
Yes. So first of all, it's fantastic to be here. The Go Lime journey is a little bit different. And I'll share it this way. I like the way Jessica said, frictionless. We say every single day, customer need. So when we built the company, we said to ourselves, there's a fighter brand mentality. And we sort of looked at Mint Mobile. And Mint Mobile created a model that was direct to consumer, that created a seamless experience in both purchase or subscription. And then we looked at a company like Boxed, B-O-X-T in the UK, direct-to-consumer model. So we've pivoted our organization. Clicks-to-commerce is fun for me because we are 100% now click-to-commerce. So 100% of our home comfort sales are coming through online. We have a completely different model. It's not about the story, but what I would say the learning that we're already seeing is there's an incredible need for customers to have choice. There's an incredible need to listen to customers. And when customers come to our website, their answer is, and it's simply this: why did I have to always have someone sitting at a kitchen table to sell me something? And the answer was, you didn't. But no one ever looked at it differently. And so the reason I give those other examples is what we've done is just listen to say, we need to create a lending experience that listens to the customer, and we have a subscription model that provides that. But we also have to listen to them and say, why do you need to sit at the customer table or the kitchen table? And we reverse engineered it. Doesn't mean every customer is going to look for that option. I spent 20 years in telecom and 5 in energy, and I always had a similar bricks and mortar model. For me, the number one innovation is around the notion of, can you do something frictionless, utilizing a little bit of technology, but a lot of customer need to give a solution that they're looking for without all of the pieces in between. And I think what we've heard before, people are looking for a retail experience, but can you shift it online? And that's been one of our big journeys and one of our big innovations at Go Live. Back to you.
I love that as a consumer to hear that these enterprises are working on making it easier and making it lighter to do this piece of your life, transact in a less friction way. However, to add a little bit of friction to this conversation, if the regulators were here, the Department of Finance has been looking at rolling out rules and consulting on lending practices that they deem to be, somewhat predatory or different. I'm not saying these are good lenders here. But what I'd like to ask you about is, given that you are interfacing with so many consumers and borrowers and potential borrowers in different contexts, what is the role you see that point of sale financing plays with respect to consumer debt and responsible lending?
I'm happy to go first. So that's a key, very, very important question, and one that is super near and dear to our heart at Affirm, and actually goes back to sort of why the company was founded. I think the answer to the question around responsible debt involves, what is the nature of the credit product you're providing? How does it actually work? And how does that compare to alternatives? And so, for example, the way we've built our product, and others in our space think similarly, we have no late fees, no revolving account where compounding interest can build up, no deferred interest, which means if a customer falls behind on their payments, we can't make a thin dime in any way from that. So what does that mean? It means we're completely aligned with the customer, and we absolutely do not want them to become overburdened, and we never want them to fall behind. Contrast that with traditional legacy credit cards. A great customer for the lender is one who's always making the minimum payment and revolving all the time. And that's a very different product. And so that means we have to be really good at underwriting. We have to do a great job to say, this purchase, today of this size, of this nature, should this customer make this purchase on credit or should they not? And we make those decisions, hundreds of thousands of times per day. And sometimes we need to say no, because we don't think that's the right decision for the customer. We do not want them to get overburdened because it's only downside for us.
Yeah, it's a really important question. I think I saw some stats the other day, like young people are now more debt than ever before, right? And a large part of that is because of the rise of point of sale products, BNPL, stuff like that. I'd say there's no kind of one answer for the whole industry, but for home improvement, point of sale, and our business, what is really interesting is our core customer is very different than BNPL, right? Our core customer is a homeowner who is kind of later in life and has access to lines of credit and cash. Our primary competition is lines of credit and cash. It's not really other providers in Canada today.
Hard to compete with cash.
Huh?
Hard to compete with cash.
Yeah, hard to compete with cash, but we do it. And we do it because 70% of our loans are on a merchant-paid promotional program, where the merchant is paying us a fee, and this is how the whole auto industry works. Where the merchant's paying us a fee to offer 0% financing or a very, very reasonable interest rate to the consumer, right? And so, there's no such thing as free money. Someone's paying someone to offer someone free money. That's how everything works. And so we've built an ecosystem where 70% of our loans are on a promotional program where the merchant is paying us a fee so the homeowner gets a better rate than a line of credit or even 0% money, right, which is better than cash. And so for us, that really has created this win-win-win ecosystem where the merchant has a sales enablement tool. And, we've got merchants paying anywhere from 5 to 15 to 20% of their sales amount into the MDR because they see it as so valuable to increasing their close rates and transaction size, especially in this economy. This is a tough economy. And so they're making bets. They're being aggressive. We provided them the tools. And then when we look at the data, we also see that a significant amount of our borrowers are actually, prepaying the loan, using extra cash to pay the loan off. Personally, I would like the loans to stay on book for longer, but from a consumer behavior perspective and fairness, that's a good thing. And so obviously, we have no prepayment fees, no hidden interest rates, that kind of stuff.
Yeah, for me, it's like a 60-second answer in our experience. It just comes down to transparency. The problem we were solving when we set out was there was like a carbon copy piece of paper that customers had in their home. Then they signed something when they moved on to a monthly payment plan. And it was confusing. It was also carbon paper, which is something we had 20 years ago. We moved electronic. We also provided a lot more transparency. But I also look at it as choice. Back to the retail example, and I think Affirm's a really good example. But if you walk into the Apple store, I always try to look at the best. You have the option of buying something outright or going on a different model. The customer is the hero. Like, that's the way I look at everything in life. So we developed our business the same way. The customer is the hero. There's a value in being on a subscription. This is the transparency of the subscription, but the value are the following. But we always have a purchase option available because back to your point, cash needs to be an option. Some people want that. But here's what I've learned in the journey. 80 to 90% of customers, especially in this market, prefer to have a monthly payment. If they prefer to have it, then you need to have transparency, and there's a model where you can win at both, but it comes down to customer choice. If you take away the choice, you lack the transparency. So that's, for me, the learning so far. I don't know, Jessica,
I was
over to
going
you.
to say, building off of both, Casper, absolutely comes down to choice. Our customers have the choice of a traditional payment method, breaking their payments into equal monthly payments, or deferred plans. And we find use cases with our merchants where our customers demand these options, and we support our merchants in sales as well by offering these options to them. We, again, double down on transparency. We hold ourselves to the highest standards of, I think we're going to get into a bit of the regulatory and compliance frameworks, but we ensure that, and we're always working, as our business gets more complex, as I mentioned, there's more choice to our customers, that they understand when and where to pay. And what we have seen is that our customers are repeat purchasing with us. That has been the big trend. There's been a ton of growth early with Flexiti, and now our customers are card holders that go again and again within our merchant network and are spending because they see the value and they like the options that we provide.
Sounds like you're doing something right, especially with the adoption, and TransUnion fact was completely accurate, so I'm glad I got that right at the beginning. It isn't a panel in 2024 with title future, with the word future in the title, without talking about AI. So I have to ask, what is the role how do you see AI, real-time data, or open banking, or consumer-driven banking, as the Canadian government has decided to dub it? How do you see all those aspects impacting point-of-sale lending, given the laws that are emerging in Canada on these future, matters?
I think the biggest thing for me with open banking is there's so many use cases. It'll be tremendous for all of our businesses to do exactly what we just mentioned of removing friction and offering that personalization, that choice, all the things. But we really need to ensure that as an industry we come together to ensure that we have the right framework in place and we add the friction where necessary. And not too much of it, that it overburdens all of our businesses in how to adopt and really bring optionality to customers that they can trust and that is truly beneficial of the customer. I think back to what Jeff keeps saying, customer at the center, that's absolutely our mantra as well. And we need to make sure that this innovation, we keep Canadians in lockstep with what it is that we're bringing to market. They understand it. They're not fearful of it. But with that comes innovation and regulation to support that advancement. So it's going to be a very interesting ride, but one that I look forward to just embarking on already. I think a lot of us are waiting.
Yeah, no, I agree. I mean, I think all of it applies. We're working through all of it. As I mentioned, I've been in the industry 9 years, and we were talking about open banking back then, and we're getting so close, but very excited there. And I think in particular, the use case of more reliable, better understood bank linking for repayments is super valuable for consumers and will reduce costs for everyone in a more secure and sort of trustworthy way. On the AI side, it's still early. There's a lot of big talk out there about what people intend to do or think they might be doing with it. Time will tell. I can tell you, we are seeing some really interesting results on the customer service, customer operations side. Not initially focused on cost savings, actually, although I think that will be a long-term benefit, but just better service, right? Like quicker times to resolve, fewer people needing to speak to an agent to get their question answered, more accuracy. When it comes to an agent, we actually already have the information of the nature of the issue. So that's probably really exciting. In addition to like engineer developer productivity, those tools are real, and that's working too. So
I'm going to pass it to Casper. I'm just building on. I had the same comment. We call we have an AI engine. We call her Amy. There's a gentleman's name as well, but just using the Amy example, one of our hypotheses has been, can you create a different customer experience if you nail it 100% of the time with the exact same? We're not done yet. It's not fully deployed. We probably need 10,000 hours to get it to an expert level. One of the premises in our business, we're Ontario owned, we're Canadian operated, we don't offshore anything. And that's a big decision because you could have a call center overseas, you're going to save a lot of OPEX, and a lot of larger companies I've worked at have done it. I'm not against it, but one of our premises has been we're operating here with local. One of the ways that we're trying to think through is if someone phones in and gets misinformation, it's usually human error. It's not on purpose, but it's human error. So one of the cool things that we're testing now with AI, what happens if you train something so well, and it's not even AI, I had a Fanatics experience where I was trying to order a jersey for my nephew, and it was like I was hitting my head against the wall because the robot was telling me things that I didn't even know what it was saying. This is the opposite. This is voice prompted. It says it's an AI assistant, but it's so accurate and it's so consistent that the level of transparency and customer focus continues over and over again because it's better than a human because you can't get the same answer all the time. And we need that. We need to be able to guarantee it. So we've been doing, sort of an Amy trial. I think we have 10,000 hours. We might be halfway there. But the cool part is I'm testing it. I have friends testing it. It hasn't failed. But at the same token, we have to get every use case done before we can start to give it to a customer, else you have the Fanatics experience and you're hitting your head against the wall. So Casper, over to you. I just like Wayne's comment about operational. That's what we need to do, is to try to bring the level of consistency to the next level.
Thank you. Yeah. I think it would be a little disingenuous to kind of be able to say, I know what's going to be the big wave in lending in AI. I think we're at the beginning of a very exciting time. But I also want to say, AI has been around in the lending industry for a long time as well. Machine learning has been utilized in credit models for a long time. We started using machine learning to optimize our risk strategies 5-6 years ago. We went down an automation path using bots 3 or 4 years ago. I think what's really changed right now is it feels like LLMs are kind of the big thing, right? So, it's exciting. Obviously, there's a lot of optimization that can be done on the process side, customer service, helping coders code better. Where I'm personally interested the most is how can it's a question more of a question than an answer, but how can we really optimize the customer experience using AI, right? We probably have hundreds of different promotional programs in the system. We go through this very rigorous process of talking to merchants to understand what their goals are and trying to recommend the right promotional strategy for them, and then telling them how to set it up. But what if we had an engine that optimized based on incoming customer data, geography, whatever, the right promotional strategy for the merchant, right? And they didn't have to do anything, and it optimized for profitability and close rates and lift to book. So I think there's a lot of interesting questions right now, and also I believe very much in continuous improvement and empowerment. So I think it's there's a lot of really smart people at Financeit, smarter than me. And, we've got a lot of great people working on this, building things. It's a really exciting time. Yeah.
I think just to add for myself as well, on the AI side, really interested in how do we solve for point-of-sale transactional fraud, as well as, I think you touched on it on the credit side, but I think for all boats will rise if to all the entrepreneurs here today to bring continuous development there, because as we all know, they're always one step ahead. It is something that we're constantly working on. We have very smart people as well who have built tons of models and that have done a lot of good. But I think that cost of fraud is always passed down in the end to the customer. And whether it's through the cost of goods or through the cost of financing. And that is really unfortunate. It's something that I think that AI and large language models and all the things can start to really help hone in on and reduce. That's my hope.
That's a really good point. Well, we only have a couple minutes left, and I want to, talk about one last thing, and you've all kind of touched it about cost and burden of regulatory and legal issues. Let's just go. I'm going off script. Let's talk about fraud. For a consumer, what should they be aware of, and for businesses that are entering the space? What are some of the indicators of fraud, and how can we guard against that as a customer, a merchant, as well as the business and the enterprise?
I think from a customer perspective, we are all trying our very best, and that really comes with the transparency, notifications, and all the things to make sure that you know that the transactions that you're making are actually your own. But the one thing about fraud is it's always, as soon as we are working on some sort of situation, there's already a new one. Do you know that there's a good and bad to all the innovation in this world, and the speed in which the world is changing with AI, I guess, and all innovations, that it's just something that we always have to be on the forefront of. We always have to be looking and supporting customers through those corrections.
Maybe I'll partly answer your question, and also relating back to the previous one. There are huge benefits to be had in fraud from scale, from data, from machine learning. And it was a huge eye-opener for me. So when we launched it, I used to be the CEO of a company called PayBright, which was acquired by Affirm. And we launched in e-commerce, and we lost a lot of money in fraud. And we were super proud when we got our fraud rates below 100 basis points, and then we were going to 50 basis points, and we're going to get there, And then we were acquired by Affirm. And in the first few weeks, I joined an executive meeting where there was a crisis discussion because the fraud rate had gone from 3 to 4 basis points. I was like, oh, okay, all right, I understand now. When you travel up the experience curve and have that sophistication of data, you really can make a huge dent in this problem. It's not to say we don't have blips or things that go wrong now, but it is much more in a box now that we're at the scale we're at than it ever was, a few years ago.
I think it's more anxiety of the future.
It's a terrible way to end it. Someone say something good about point of sale. We have a minute and a half left. It sounds like it's going. It's being adopted in more and more volume. This is what I'm hearing from the panel for a good reason, right? And it sounds like to me you're all cognizant of consumer education, and the FCAC would love to be happy to hear those things. What are your final departing thoughts about the future of this space and what you're hoping to see it becomes?
I'll pick it up. Try to go positive to close it out. So listen, I think what's been very interesting over the last few years is we've gone from an economy where it was very easy to make money to a very difficult economy very quickly, right? And I think that was good. I think what's happened is it's forced a lot of companies to get better or die or rethink practices, and ourselves included. And, the last few years have really shown us where we can be better as an organization, and we've made a lot of changes, a lot of improvements. We're coming out of that, and I think 2025 looks super bright, right, around the macro. And so, I'm really excited for the future. I think that the new economy is going to reward companies that really, really understand, to Michael's earlier point, their unit economics, how to make money and scale at the same time, versus this previous economy which was kind of growth at all costs. And I think that's kind of a permanent change. And so that bodes well, I think, for Canadian businesses. I think that bodes well for point of sale, for consumer. And I do think that the point of sale space is very unique because, like, we're FinTech. There's a true lending component of the business, but there's also a tech component. And so we're kind of in this middle ground. And I think that there's a lot of new tools and solutions being developed and are available now to combat fraud. New AI that you kind of get through this evolution. You start to be able to layer on additional things and really build a great business. So I think the future is very bright. But I'm also an eternal optimist. That's kind of my job.
I'll leave a positive note. If you've never read the book Story Brand, Building a Story Brand by Donald Miller, I think if you assess a problem and you guide a customer and the customer is the hero, all paths lead to positivity. So I think as a mindset, often you drive customers to an outcome based on the benefits of the business. But if you drive a problem and you let the customer choose their path, if you provide them as a guide, they're probably going to get to where you wanted to go with your help. The problem is if you force them down a path, you end up with negative consequences. So that's been enlightening to me. I've read the book so many times. I think it's been one of the ways we've supercharged our customer focus. But I'll pass it to the last two because I see a clock ticking.
Absolutely. I think we've touched on it a number of times today. It's really about putting customer at the center of everything we do. Our merchant partners and solving for their unique customer needs with our offering, making sure that we have a clear and supportive products that help Canadians manage their cash flow. And I'll pass it over to you. Last seconds.
I would just close by saying it is a huge privilege to be in this industry, which I think has grown so much over recent years, and it truly is a new way to pay that complements other forms of credit that have been out there, and it's just going to continue to gain share, and it's fun to be part of it.
Woohoo! Thank you to our panelists and everyone for joining us.
Thank you.